Elite Trading Group, where strategy meets mindset and discipline turns into income. I'm Coach UV, all right? And listen, I got a special episode for you guys tonight. It's going to resonate with you, and it's going to be really prominent going into next week and the rest of the month. This is the October signal that traders cannot ignore, okay? The same thing we did last month, we're going to keep this going, all right? We're going to cover these volatility moments right as the month begins, okay? We're going to talk about quantitative easing by the Feds. If you don't know what that is, don't worry, I got you covered. And these are some of the reasons why and other clues that tells me that we are going to go higher for longer, all right? So if you didn't check out those videos over the weekend that I've been posting, make sure to check out the playlist and subscribe to the channel. Hit that bell notification so that way you're notified when I drop valuable videos, okay? I got a special ticker for you guys, and I got some great commentary, and I promise not to hold you too long, right? So we're gonna hit you with those stocks and hit you with those gems right after this break, all right? All right, guys, listen now. Right in front of you, I have the SPY. Now, what I have for you guys is some technical analysis that really matters, okay? Now, I have these things on my screen, okay? Now, excuse me, these represent the horizontal lines from price movement from previous days, okay? So it's what they call a DPMR system. That's right, a DPMR system. It's a system that I like to use, the daily price movement range, all right? And I like to use previous ranges to let me know where price is headed, okay? Ranges act like magnets. Just above here, we have a magnet here, and below where price is, we have a magnet, okay? These ranges act like magnets. Now, what does the DPMR system tell us? What does it do, all right? It represents the daily high, low, open, and close. So there, all of a sudden, you have four metrics that you're dealing with, okay? Four metrics, all right? That's the daily open, the daily high, the daily close, and the daily low. Those give you your four metrics. And I like to use the demand level, all right, the floor, all right, where support lies, like here while it bounced, all right? I created these same levels around here on these days before, back on the 19th. All right, green was for the bottom of the daily range, the yellow was the midway of the daily range, and the red was the resistance level. All right, we've since then broken past the resistance levels from previous days and retrace all the way back down to these lows from previous days. Okay, and now we're just rotating. Okay, and I want you to understand that we are just inside of a pendulum swing. Okay, a pendulum swing. Now I want you to pay attention to these. Okay, listen, check this out. All right, you ever seen the Pac-Man game? All right, you ever played Pac-Man, right? And you have that mouth comes and get those dots. All right, that's what we're looking at right here. We have this megaphone type pattern, okay? And these are emotional swings, and we go back and forth, back and forth. And what you see is these pendulum swings of human behavior, okay? Back and forth, okay? Back and forth. All right, this is what you tend to see. Now, we can get these wild swings, all right, and variations in between, and the market doesn't go straight down. However, the same thing that I'm giving you here is the same thing that's happened before, okay? All you have to do is look left, look at previous price action, all right? Now, history doesn't have to repeat itself, but it does rhyme. Keep that in mind, all right? That same move happened here, okay? That same move happened here, okay? What you have is a pendulum swing, all right? A swing of emotions. Pay attention, I'm going to show you, all right? What I just showed you is literally right here. Stay with me. Here's another pendulum swing, okay? Okay, it's not so perfect, but you get my point. All right, if you can catch these, see these moments in time, all right, it'll help you understand how you can catch price, okay, at these swings, okay, back and forth, okay, in between here, all right, and this is the emotional swings that I'm talking about. Now, at this point, we didn't make it back down, okay, all right, it failed to fall back further, and we created these higher lows. All right, ultimately all the way up here, all right? So price has been strong ever since then. All right, now moving on along over here. Now that you see everything, okay, let's clear off our chart. Okay. Now does this look the same? Does it look the same? Okay. Right here we have the top of the range here. Okay, we're just trying to point out the range. Okay, the range is below and the range is above, and that's what we have, and we're right dead slab in the middle of it. Now right now at the time of this recording, SPY is a little bit up pre-market. All right, we are above the previous close, which is bullish. All right, remember, we are above the previous close, we are bullish, and right now we are. And so tomorrow I'm looking for a retest maybe, but I want to wait for a pullback because we do have some overhead resistance. And you want to keep in mind about the economic data that comes out during the market, right, while it's open, that could affect price. Okay, that's what you want to think about. All right, I want a discount, I want to pull back on a retest of these lows. All right, will we get that? We don't know. All right, well, we have to trade the chart in front of us. I did a video last week, all right, and you can check out that description in my playlist down below, where I talked about how prices could fall, to be cautious, that we could take a fall because we've been really going up for a long time. All right, we got that pullback. All right, I also talked about this double bottom. All right, this recovery here. Okay, but I gave you scenarios. I said if we recover here and we bounce back, that we will have a trouble area right there, and that's what you see. We having a little bit of trouble area because this is where we fell before, because the bears had a lot of momentum. And so you just want to anticipate us maybe retesting these lows to maybe catch a better risk to reward for calls towards the upside. All right, and that's what you see, you want to see right here. All right, this will be your essentially where you're getting in at. All right, this green for risk. Okay, sorry, we're going to make this red for risk. And a little bit below, right? A little bit below, okay? And you want to take the rest of the area for this to be your risk to reward. This is your reward here. And that's the way you want to look at it. You want to look at it. It's not impossible to think, right? It happened over time, okay? It happened here, right? We bounced here, retested those highs. Bounce here, we tested those highs. Now we even have a three-legged pullback, 3 days in a row with a double bottom. All right, with market pressure towards the upside. So what are the odds? What are the probability, right, of us getting up to retest these highs? That's what you want to think about. Wait for the pullback, right? That structure, market structure, understand the structure, right? Maybe we stop here at a 658 at a previous demand level, all right? When bears get overly anxious, right? And they want to try to buy puts to think, all right, you have to watch for these things. Just for us to go here, all right, to retest this trend line here and break out. Taking out these bears, right? Running those stops, having some trouble areas here, and when we get that pullback, you want to grab that hidden channel, that higher low. All right, this is the perfect pullback. This is what you want to think about. All right, right there will be your optimal pullback. Okay, just understanding these scenarios. All right, but as of right now, we are above previous close, so there's a chance that we might not even get that move down. Okay, we could just get a straight shot up here. Okay. If it does that, who knows? Maybe some rookies chase it entry day, right? Because they didn't swing. As we're taking profits, we retrace back down. We could have a down day, right? It depends on human behavior and how the market goes. Remember that we have a closing market coming up on October 1st, and that is the middle of the week. Now, every week the Fed put out a number. It's a Fed's balance sheet. Every Wednesday at 4:30, they put out this metric. The same way with the COT report. It's all math. It's all quantitative. Guys, listen, the options are perfectly structured. They're perfectly priced inside of the option market, and it really controls everything. And once you know what to think about and how to look at the market structure and price action, it changes the way you trade. Think about it. The only reason why I'm saying that we can stop here and retest because people are chasing because they didn't swing is because we rejected here. So there's a chance that we could just be smartly taking our profit from the swings, locking in that money to get a better risk to reward. We have data that's coming out next week. So possibly that data, like it always does, seems like it gives us a reason to buy or sell because volatility creates opportunity. And I want to show you guys this right here on the screen. All right. Next week, starting Monday on the 29th. What do we have? We have pending home sales at 10 o'clock. We have a Fed member speaking at 8 a.m. 6 p.m. we have Fed Boston speaks. All right, so that's after the market. But during the daytime, we have a speaker and we have the pending home sales. All right, we don't have any red star folder news. If this is your first time watching, red folders create more volatility. Orange are more light volatility, and yellow is really a low volatility. And that's the way these colors work. We don't have any red folders on Monday, but we do have orange and yellow. And so around this time, this is going to be the catalyst for price to react. All right, it's going to be a reaction from this number. That's why it's important. I don't know if you're getting this yet, but it is seeming like this is a system. The way that I trade is a system. And if you follow along long enough, all right, join the community, tap in, all right? I'm tired of you guys not being able to be profitable or being prosperous in this game when it's really right here in front of you, all right? So again, be mindful about the data that's coming out. All right, understand what we're dealing with. All right, my targets on SPY are, all right, listen to me carefully. I have my notes right in front of me. All right, SPY quarterly high. All right, SPY quarterly high is 667. All right, 667.34. All right, that's SPY quarterly high. If we break that, all right, which is the high, right? If we break that, we can continue higher to finally breach the all-time highs of 670, which we have never went before, right? Now, currently, the current price is 662 at the time of this recording, and that's above the previous close for SPY, and that is 661.82. All right, the previous close is 661.82, the previous close on SPY. Above that, we are bullish. If we break above it, right, and you wake up in the morning, the bell ring, and we get above it, wait for a pullback to that price itself, 661.82. It can act as a place of demand. The psychology and the significance of this number makes sense, all right? I'm going to come back and replay this. Just remember, all right? So I want to move on, but remember, the pre-market high, 662.37. Write that down. The pre-market high for SPY right now is 662.37. We break above that any time of the day, whether we're asleep or when we wake up. We're going to try to retest these highs that we got before. So 665 would be in play, okay? Think about it. Taking out all these previous days, all right? Could take us a couple days, but I think we're going to rally hard. Now, let's move on to that stock that I promised you guys about, all right? And then I'm going to briefly switch over to quantitative easing, and then we're going to move from that, all right? This stock is ATI, all right? ATI. All right, now listen, this stock has been moving a whole bunch. I don't suggest chasing. We can wait for a pullback, but I love the setup on this stock. All right, these are the day trade levels. All right, 83.49. Remember that, 83.49. Okay, 83.49. This is the day trading level. Okay, and you want to just watch out. All right, that trading level can get up to 86. Okay, so if we get to 83.49, 83.9, 83.50, and it's acting as demand, a place of support, you want to look to day trade calls towards 86. You understand? You got to think about that, all right? Where's the demand and where's the resistance? Where's the risk and where's the reward? That's what we're talking about here, okay? That's what we're talking about for ATI, all right? Now, where are we at right now? We are currently at 84, a little bit past 84 right now on this stock. So previous close on this, all right, previous close was 82.81, all right, 82.81. That's what the previous close was, and we are above ATI right now. And remember, any stock, any ticker, anytime we are above previous close, we are going to be bullish. Below previous close, we are bearish, all right? This is the daily and the weekly close. It works for both of them, all right? So 86.34, that's the previous quarterly close. Above 86.34, 92 and 95 is the next target, okay? If you're going to buy multiple contracts, you want to think about thirds. If you get in above 83, all right, your next target for your first target would be 85 and 86. Sell some contracts if you buy multiple contracts. If you let the ones run, right, or you sell them all and wait for a pullback and you get back in, then you understand that the next levels above 86 are obviously 90, all right? And 90 is going to take us to 92 and 95. But for a swing, I want to continuously see the weekly close always open above, always open above the previous close. That's all I want to see for me to swing, because the ultimate target for me on this stock is $120. And so you want to see price break above these previous highs here, right? You want to see structure hold, all right? That's what you want to see. And right now we are doing that, but you don't want to rush and just rush in, all right? You want to wait for a pullback if you're not already in. This is not hard, all right? Rewind the video. Remember these levels, okay? Right now, the volume profile on this stock is showing us the volume profile P. That's really bullish, okay? So if we can complete that move here, We got to move from all the way here to there. This is about 8 bars, a 7% move. Okay, that price is $77. The high of this stock at a break, I would say, is 82. So 78, 79, 80, 81, 82, $5 or $6 move. We could possibly break out and we can get that extra $6 move that we were talking about, close to 86 and 90. Remember that I told you that the swing target ultimately is 120. So think about leaps. All right, think about leaps. Now, I know you guys are probably wondering about some other stocks. I'm going to briefly touch on Tesla. Tesla here is given opportunity as well. We are oversold. We could be resetting. Tesla is trying to retest these highs here of 445. Okay, be careful there. Obviously, price has failed there before, but if we have momentum, we could just be breaking back. All right, we sprung back. Remember, we talked about the slingshot reversal on the Nasdaq. Tesla's part of the Nasdaq. All right, so we got that slingshot, and we wanted to retest those highs. We have not retested that yet, so there's a chance that we could hit these highs and keep going towards 450, but you gotta wait. This is a bull flag, all right? And this stock went from 420 all the way to 440. That's a $20 move. So above 440, 445, we could reach 460 and 470 on Tesla. All right, that is 460 and 470 on Tesla. The time of this recording is 9:28. I will be replaying this and recapping it so you guys can see the accuracy of the unique trading group. All right, now we're going to get off of that. We're going to try to end this video, but I wanted you guys to just understand some things that's going on with quantitative easing. All right, this is the signal and the trading signal for October. You guys can't ignore monthly and quarterly closes, weekly closes. Prices above it, bullish. Price below it, bearish. All right, always wait for a pullback. Don't rush if we're in a bullish market, right? Of course, there's other things to think about. All right, but this is not the video for that. We're focusing on technicals. Now, right in front of you, you see these things about quantitative easing. Now, I want you guys to get a glimpse into what it is really. So I'm going to click on this quantitative easing so you guys can just understand a little bit about it, and we're going to wrap up the video. If you haven't yet subscribed to the channel, all right, please subscribe to the channel and hit the like button. Smash the like button if you've been enjoying the commentary so far. Okay, I really do appreciate you guys tuning in with me every week and watching my videos. It really helps the channel to push to those who really want this information. Okay, so thanks for rocking with me, and again, we're going to wrap up. Just want you guys to get some valuable information, right? Quantitative easing, quantitative tightening. All right, the QT would be when they take money away. They remove money from the markets. That's why you really see the markets go down. Although you hear about companies, they're doing bad, and you see all the news, right? All the fear mongering, all right? These are the things behind the scenes that are happening. So if you've never heard about quantitative tightening, hey, hit the thumbs up. This is something new for you. All right, quantitative tightening involves monetary policies that contract, all right? They contract the Federal Reserve's balance sheet by either selling treasuries or letting them mature. This process reduces liquidity in financial markets, and it is designed to control inflationary pressures and prevent overheating economy, effectively functioning as the opposite of quantitative easing. All right, now when you want to talk about quantitative easing, let's scroll down here. All right, because there are some pros and cons. All right, pros and cons of inflation. All right, which is why these guys do that. Right, the quantitative increases bond supply in the market, focusing on reducing money circulation to control rising inflation. This process leads to higher interest rates. All right, a growing bond supply or reduced government demand makes buyers require higher yields for purchases. These higher yields would raise the borrowing costs for consumers, causing them to be more cautious about going into debt. All right, this would then dampen demand for assets like goods and services. In theory, less demand means stabilization or lowering of prices and a check on inflation. Okay, now you can read some of this as I scroll. Now I wanted to get into quantitative easing. All right, quantitative easing, and wait with me 1 second here. 1 second here. Right. Okay, so quantitative easing. I want you guys to see this. All right, quantitative easing. Okay, here we go. All right, quantitative easing, how it actually works. Let's run through this. Okay, guys, you can always rewind the video. All right, so financial crisis of a sort that may normally hit financial markets once in a century struck twice in 2 decades. All right, first there was the 2008-9 crisis, right? Financial crisis. Then COVID-19 pandemic that hit us. In both cases, monetary policymakers in the United States slashed interest rates to near zero. Now, as that wasn't enough to stem the free fall of asset prices and economic activity, they followed up by another form of relief, quantitative easing, or QE. QE is shorthand or unconventional Federal Reserve policy that involves buying up large quantities of financial assets. By doing so, the central bank aims to prompt investors to rebalance portfolios in ways that lower yields across asset classes, further lifting financial markets in the economy. Chicago's Booth Julia Selgrad analyzed the effects of QE to see how monetary policy through asset markets affect the real economy. She finds that when the Fed buys government bonds, investors buy corporate bonds instead, which leads to lower interest rates and more investment. The findings indicate that quantitative easing in QE has a strong effect on portfolio rebalancing and helps bolster real economic activity. All right, as told, the central bank bought more than $5.6 trillion of the treasuries through the quantitative easing programs between 2008 and 2023. The Fed argues that as it buys treasuries, investors on the sell side of the transactions recycle the proceeds into securities with the similar characteristics. For example, when it buys long-term treasuries, sellers move the proceeds into long-term corporate bonds. Fed officials say this increased demand pushes up prices of private debt and lowers effective interest rates. All right, guys, that's what I want you to know. That's what I want you to understand. Thank you for listening to that commentary. I hope you guys remember what we talked about for SPY, Tesla, and the stock ATI. All right, the NASDAQ. The NASDAQ is also setting up, looking really, really nice. So you want to pay attention to that as well. I didn't want to leave the NASDAQ out. Right, so before we get away, I want you to see that NASDAQ looks similar to the SPY. Okay, now we are at an extreme, all right, at these previous highs. All right, and so you just want to wait for pullbacks if you're not already in. All right, QQQ is trying to retest these same levels. All right, green light, yellow light, red light, the daily price movement range. All right, and if we stay below it, we're going to be retracing back towards the downside to retest some of these levels here. All right, 594, 595. Maybe even a 591, or maybe this level here turns into demand. All right, resistance turned into demand. All right, breakout pullback on QQQ. All right, breakout pullback. All right, we got to see what happens tomorrow, guys. We got to see what happens tomorrow. It's the only way to tell. So if you're not already part of the community, if this is overwhelming for you and you still feel like it's too much for you, you can't navigate your emotions or executing orders, join a thriving community down in the link below. We trade together. We trade live. I really want to shorten you guys' learning curve, okay? Invest in yourself and invest in your education. It is the only way to excel in trading, all right? Other than that, it's trial and error, all right? So again, I'm Coach UV. This is the unique trading group where strategy meets mindset and discipline turns into income. And as always, guys, I always say focus on the process and not the profits when it comes to trading. Focus on the process, all right? Always define your entry, your exit, and your risk before every trade. And remember, you don't have to trade every day. Sometimes the best trade is no trade. Okay, and you always want to know what your exit plan is when you're taking a trade. Protect your risk, all right? Learn to lock in some gains, okay? And study hard and get screen time. You're going to be the one that's dangerous. Thank you guys for watching. Again, until the next time, peace.